I now hand the conference over to Mr. Anand Shah from Axis Capital. Thank you, and over to you, sir.
Yeah, thanks, Rutuja. This is Anand here from Axis. Thanks and good afternoon, everyone, for joining the Godrej Consumers conference call to discuss the business and performance and strategy for the Guam business. We have with us Mr. Danish Gordon, who's the business head for the Guam business for Godrej. So without further ado, I'll just hand over to Bharti from Godrej, to take over the proceeding. Thanks, and over to you.
Thanks, Anand. Good afternoon, everyone. We hope that you're staying safe and healthy. Thank you for joining us today to discuss the Africa business performance and strategy. We have with us Mr. Danish Gordon, Cluster Head, Godrej Africa, USA and Middle East, and Mr. Sameer Shah, Head Investor Relations. We'll start with Dharnesh sharing his perspective on the business, and then we can open up for a Q&A. Over to you, Dharnesh.
Thank you, Bharti, and thank you, everybody, for being on the call. I really appreciate your time. Good afternoon, good morning. I'm not sure where all of you are. I think the first thing is, in these times that we live in, the first question that we always have to ask is to see that all of you and your loved ones are safe and healthy. And indeed, it's more than a year now since the global pandemic was declared a pandemic, and I know it hasn't been easy time for most of us personally. So I appreciate your time. So I think the first, just maybe me setting some context in saying that, in a way, in our Africa and Middle East and our US businesses, it's really a mindset. And the mindset starts with this premise that we have, and what we had to embrace is we have to win in our markets of limitless possibilities. So, this whole question about everything can and will go wrong, but how do you grow a sustainable, profitable business over time? And I think the first thing we always talk about as a team is about embracing values that encourage collaborative workplace and discipline. We see change rather than stability as natural, and this whole drive to do more with less. So over the last couple of quarters, we have seen a good, solid, decent, and I know we can use many adjectives, but we have seen a recovery across our Africa, US, and Middle East cluster of businesses. And we've seen this steady performances continue to begin to win more with our consumers in each of these markets. We've seen a steady performance with mid-set growth. And the key areas from a geographic perspective was coming from our Southern Africa business, our cluster in West Africa, which includes Nigeria, Ghana, etc., and parts of our East Africa business, particularly areas like Tanzania, where we are seeing stronger growth than the rest of our geographies. The U.S. business has also seen a decent revival, particularly in the last 2 quarters. It's a lot about refocusing, and we've seen that when we do put the right areas of focus, we are able to begin to win with our consumers. And when I talk about focus, it's really about getting what we all call the basics, and maybe we should find another word for it, but getting the very basics right and strengthening our operational and strategic focus of the business. And in a way, this term that we continue to use about making sure that execution discipline is there. And a lot of times we always knew what needed to be done. Just the follow through of execution and discipline in execution was an area that we have begun to focus much more on. So when I look at very different parts, it says, how do we grow market share, which means how do we grow? How do we manage cost and manage cash? And how do we build strong, effective teams? So those kind of the 3 broad pivots of some of the areas of focus. I think we have seen seeding in multiple blocks to drive sustainable, profitable sales growth. And one of the big pivots for us is really route to market or go-to-market opportunities. So making sure that we understand our channels more, we understand the geographic play more, and how do our consumers get access to our products more. And, in these markets, it's really about product availability. Effective distribution continues to be the single most determinant of success in African consumer markets in particular, where the retail market is extremely fragmented. It continues to change, and I think obviously COVID has brought new dimensions and challenges. But we do see that our business opportunities to scale up across multiple channels, getting to be more direct, has to be complemented by serious discipline in execution. And flawless execution is the term that we continue to embrace because it is about that. It is less of strategizing and more of doing and making sure it's done in the right way and with the right guardrails and right frameworks in place. So we are more and more becoming a multi-channel player. We continue to find ways of deepening and widening distribution. And in terms of discipline, it's really from idea to launch. So when we talk about innovation, oftentimes it's not the innovation or the product that's not doing well, it's our ability to execute over a period. So overall, we've seen that our ambition to have a sustainable double-digit growth has to be guiding everything that we do. But we also have to start making choices on where to invest, how to keep our brand relevant. And in this area, we are beginning to focus more on what really matters and what consumers really value. And using it.
Sorry to interrupt. The line of the speaker got disconnected. Please stay connected while we reconnect them. Ladies and gentlemen, thank you for patiently holding the line. We have the line of Mr. Dharnesh Gordon connected back. Thank you, and over to you, sir.
I'm really sorry, everyone. I'm not sure how we got disconnected. I was making a point about ambition becoming a lens to guide our decision making. It's about making choices and making the right choices fast enough. So one of the areas that we've looked inside our business is, are we structured to do this? Are we structured to be agile, to be focused, and at the same time, are we focused to then drive scale? And it's kind of, sometimes it looks like things that are pulling at different ends of something, but it is important to get those perfect right. So one of the rollouts that we've had very recently is we have begun rolling out centralized category management structure. And more we find that we are beginning, instead of getting better execution, we have not been able to cross-pollinate learnings across geographies, where the consumer tangent is very similar, with maybe tailored local execution, but in general, our offerings very similar, but we are not allowing ourselves to take that opportunity. I'm sorry, I don't know what it's doing. So one of those ways is to do that. Hello?
Yes, Mr. Dharnesh, please go ahead.
Yes, I'm sorry. I'm getting a lot of disturbance. So one of the ways is that we roll out the category management structures across our hair extension business, and we often refer it to as dry hair business, in our wet hair business, which is hair regimen, hair color, and hygiene. And part of this role is, how do we more and more allow execution to be locally tailored, but our offerings and category understandings to be cross-pollinated fast enough and across the geographies, because we have often found that we are relearning too much instead of leveraging learning in different ways. And this is very much from consumer insights all the way to manufacturing excellence. Are we producing the right product at the right manufacturing level, scale, with the right efficiencies? And this is what we are finding, that given that centralized direction more, it's allowing us, and it's very much early days. We have a lot of work to do in the ways of working, but we're already beginning to feel that this is coming through very nicely, and it will allow us to focus on ways that have been different in a way to the past. So this centralized structure has become quite important. The other thing is we've also started to relook at all the operating models for each of the geographies And with the operating models, and they may be very different because you have tier one markets, tier two markets. What is the structures we have? What is the opportunity for more shared service leveraging? Leveraging shared services more from an efficiency perspective, certainly from a cost perspective. We do see those opportunities coming more and more. So we have many building blocks that we are putting in place, and I think the whole point is we have to build today for the sustainable future. And building is not just getting a sales target for the month; it's really putting the right things in place and using governance as a very important framework in how we're getting there. And we have to build ecosystems that are sustainable over a long period. And I think we continue to become more confident that the longer term potential of what we are doing is there, and our ability to drive profitable double-digit growth is there for the taking, as long as we keep on the one side the discipline, on the other side our entrepreneurial agility, etc. I think when I talked about earlier on, I just very briefly said this word, building strong, effective teams, and I think this is another area of focus. I'm very, very pleased. It's been a year nearly in the business. Next week will be a year, and I think the teams have been very resilient. The agility that has been coming through is going to serve us much better in the long term. Obviously, we will continue to focus on developing and retaining the right talent. We made a lot of changes in the team over this last period because we have to begin more and more to transform into a high-performing, agile organization. But having the right competence to meet in place, building capabilities for the future, etc., become more and more a focus. So, one of the areas I even talked about was managing costs and managing cash. I think focus ranging, smarter pricing. Oftentimes we're leaving money on the table because our pricing and are we constantly recalibrating our offerings? Where are the areas of high capacity utilization that we should be using more? Re-looking at the entire manufacturing footprint, where we look at how can we have less complexity and drive scale, rather than many manufacturing setups all over the place. And I think understanding it from a geography, from an economic block perspective, what are the transfer, the duties, etc., import duties, and more we begin to find that there are synergies that we can put in place which will help us. So I think I know I've kind of said a lot of things, but I think the most important, probably the words to describe it is, yes, we are confident. Yes, we've seen things turning around in a way that we begin to feel more and more comfortable because it is not short term. The building blocks will always be being built, and it will always need refining. But I think building this ecosystem now will give us a long-term sustainable growth that I think hopefully we'll all be very proud of one day. But we also have to fix the airplane while it's flying, so it's not that you let go of short opportunities or the ability to at least get some profitable growth going now. And I think this is what we begin to find because success breeds success, and the momentum and motivation of the team, the energy that's coming through now to deliver on the consumer opportunity. And I think this is the one area we want. It is opportunity is there. It's just how you get to that opportunity is really the choice, not whether you seek that opportunity. I've tried to very broadly have a broad brush, and I hope it was okay. And I'm sure there'll be. I'm happy to take questions when it's appropriate. So I will be open to that, and I'm not sure who will chat next.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Manoj Menon from ICICI Securities. Please go ahead.
Hey, Dharnesh, hi. First of all, thanks for taking time out, to speak with the larger audience. Appreciate it. Just a couple of, questions from my side, and then I'll come back in the queue. The first is, when you considered, this opportunity from a career perspective, maybe 18 months, 24 months back, just wanted to, get your thoughts on, what are the, strength, weakness, opportunities, which you saw in Godrej as a group, as the Africa business, which prompted you to, leave Nestle, let's say, after 16 odd years. That's the first one. Maybe you may not want to even respond to this all as well. So I just wanted to get your perspective on how did you look at it, for the Godrej opportunity from outside before you joined. That's one. The second aspect is on the people part of it. I'm sorry if I missed any comments in your opening remarks. At least I don't think I did. Anything on the people side, the culture side, etc. Now that you've just about completing 12 months, your initial observations, any changes, etc. And lastly, if time permits, the way you look at the household insecticides opportunity, specific to some of the developed markets in Africa and some of the, let's say Kenya, Nigeria, etc.
Great. Thank you, Manoj. So this is the probably the most challenging question everybody asks me about why. When I was first approached with the opportunity and I didn't understand the company, I then did some research, and it was just, I think the opportunity to build something was exciting for me personally. I think, but when you cross that with a company that has such a deep history, the values of the organization, and also the ambition of the organization, it's like, okay, this is something that really appeals to me. It's like an adventure in a way that was made for my own mindset, and I'm a guy who likes challenges, and I like adventure, but it is also important that you have the adventure with the right organization in terms of, does it align with your personal values? Are people that I can work with, and do they have long vision and prepared to understand that in order to make things happen in some of these geographies, you need to play the long game. And when all of those things started coming together, I got really excited. And part of it, to be very honest, was I started to play a bit. I love Africa so much, and I was born in South Africa, so I don't know. I always have this. And probably being in Southeast Asia, and I didn't know. I knew where my next career move was. It wasn't. It was just kind of okay, another move, not something that was super different. And I honestly, and I'm not probably sharing a bit too much personally, but I reached this age. I was 55, and I said, okay, I have 5 years or 10 years, whatever left. Let me start doing something that I'm going to enjoy and look back on. So it's kind of a not very smart or logical way of deciding to join, but I think it was just, I had such a good feeling, when I met Lisa and when I met Vivek at the time, and then I visited India. I just had the right feeling that I can find a home here, and we can do stuff together. I mean, obviously it was going to be challenging. There was no doubt about that. I kind of knew what I was signing up for in the beginning. And maybe I should have thought about it more clearly, but in a way, I think, I had to have this approach that it's going to be fun, as long as we stick to a game plan and we do things in the right way. And this is why, one of the first things I always talked about is balancing growth and governance, because most of these markets, especially developing markets, you have to be as smart on governance as you have to be on looking at how do you grow the business, because it's easy to sell, but to collect cash is a big problem, right? So and you can really lose your pants in so many ways. So not being smart about that and not really challenging yourself on those things become a challenge. So I think I had probably my own experience, geographic experience helped. Obviously it was categories I didn't understand, but there was another challenge, like doing something new and different. So it's kind of, maybe it's a schoolboy enthusiasm. I don't know how else to say it, but it just fit. It was just a good fit, and I felt the fit was right for who I am and who the organization was. With regards to, I think you asked me another question on the. I think just household insecticide, right? Household insecticide has to be one of the biggest opportunities. And we started to play last year in a more serious way, because any part of the challenge is that there's a lot of technical challenges you face in terms of regulatory, and there's quite a long time span to register products, etc. And we've been going through that process. We've been having really good success in Nigeria, for example, with Goodnight. We also have been growing our Zambia business very well in household insecticide. In fact, we've had quite a big growth off a very small base, yes. But the one thing that we realize, and especially if I go use Nigeria as an example, is if you put the right effort, you will get the returns. And I think we were playing with some different models, and one is mainly from a brand activation perspective, introducing the product, and where we were investing, and I think maybe in a month or two, I don't know when the full results will come out, but you will see that spurt of growth and the green shoots of a really good HI business coming through. And Nigeria has to be a focus for us. It's the largest opportunity for sure, but we are doing very similar work in Ethiopia, in Zambia. But it's a different model. So one we're playing is entrepreneurial or enterprise model with dedicated distributors. The other one is we going ourselves fully all the way to operations and really building a sizable business in the future. And I think for me, the massive opportunity certainly is Nigeria, then obviously spreading to the rest of West Africa. And in Central Africa, we're already seeing some success. But with two different, very, very different models. And also it's really understanding that the product offerings are different. And for example, I just discussed with my Middle East team yesterday about HI for the Middle East. And in the Middle East, mainly in UAE, etc., it's not mosquito that's a challenge, it's cockroach that's a challenge. So making sure you understand that you have the right consumer proposition. And let's understand that Goodnight as a brand or Hit as a brand has different relevance. And I think that kind of area of focus is coming through. And honestly, one of the reasons why I feel that success is coming through is because when we started dedicating category teams to be focused on this, we see the results coming. So I know it's early days of saying that the benefit of a centralized category team, but I feel that it's suddenly more focused. It does not take away from local execution and even local tailoring. So we're not making a one size fits all. So I think that would be the biggest mistake you made. So we are very confident that we think we know what it needs to succeed. It's not necessarily it's not a cut and paste of the India success, but from a technology perspective, we have the right products, we have the right technology. It's how do we execute it in a smart consumer way with the right offering, and I think this is some of the areas. We've had probably a very good year of learnings of HI, and one of the plans is to double down our investment, particularly in Nigeria, on Goodnight. You could ask me something else about talent.
Yeah, no, I think thank you so much, Danish. That was super helpful. No, I had one more which I had asked was largely on the people culture. You alluded to a lot of comments about culture, but how did you look at the people part of the business, and is it status quo? Would you had to kind of beef up, embellish, amend? So just trying to understand your people strategy in Africa.
Sure. Look, the one thing is there is super talent available in Africa, for example, and I think this. But you also have to be an organization that can appeal. So in Africa, we don't have, as a company, we don't have the name that a Nestle, Unilever has, because people always went to the traditional MNCs, right? So this is one of the areas is how do we attract some talent? And honestly, one of the big changes we've had is we've brought in a lot of new African-born talent, and across the spectrum in kind of senior roles, and we're seeing that value because there is no better if you get the right talent who understands the market intimately with also having the right values. Then it's a recipe for super success, and it will be very interesting. If you took an organogram from a year ago to now across the highest level to the middle to the lower, and you'll see a lot of good African talent coming through in joining us. And I already see some advantages. Even from a finance perspective, Sami's team is now getting a lot of local talent coming through. And it's not just about local and not local. I think it's we also cannot we shorten the learning span of the market if you bring local people who understand the context, because there are different cultural connects, and there are different things from a consumer perspective, also the way business is done, etc. So this local understanding has tremendous role. And also, I think we want to be seen as somebody that's attractive for everybody. And it's not just talent that is not African that can go into Africa. We must be seen to be, as in, when we talk about equal opportunity employer, in a way, is also about building a brand of Godrej name in Africa as being someone who's, I'm not just a lower white collar or blue collar employer. I'm also an employer of super talent, and I will bring in leadership and African leadership into more and more leadership positions. So, it's really interesting if you see before and after, and we're not even begun to take our journey, but more and more I'm beginning to be confident that we can attract the right talent. And later on we start cross-pollinating, if somebody from Nigeria can go to South Africa, somebody from South Africa can go somewhere else. So allow that kind of interplay to happen as well.
Thank you, Dharnesh. Truly helpful. All the best. Good luck.
Thank you.
Thank you. The next question is from the line of Percy Panthaki from IIFL. Please go ahead. Percy Panthaki, may we request you to please go ahead with the question?
Am I audible now?
Yes, you are.
Yes.
Okay. Dharnesh, just wanted to understand what drives growth in your business, because in the last few quarters, the growth has picked up back into double-digit, almost mid-teen kind of levels. But before that, for quite a few quarters, the growth was really low. So just wanted to understand all these gyrations that we are seeing. Are they mainly explained by environmental or macro factors, or is there some business-specific explanation which is a larger contributor to these gyrations?
Yeah, I think, obviously there could have been macro factors, and I think maybe in the first 2-3 months, maybe there was some supply chain challenges from other people. But if you look at most of our competitors, most of them are local anyway, so we didn't have that challenge. But I do think if I have to start singling out a few things, one is really focusing on route to market. So our GTM, were we just a distributor, wholesaler, push organization, or we understood offtake? So driving from being a sell-in, if I may use the word, and I trust the audience understand, sell-in to become an offtake organization. That it's not just loading a wholesaler with your product and you don't care whether it actually sells out of your store into the retailer and off the retailer, even if it's into a salon. So I think getting the team to start focusing on, if you build offtake, and you really spend the money where you're supposed to spend, giving retailer, if the margin only go to your distributor and to the wholesaler, and there's not enough funds to drive consumer awareness of your offering, to drive brand activation, etc. Then all you're doing is what we call BTL, right? So I think understanding that and focusing more and more on that. I'd rather come to an ideal world where it is pure replenishment based on consumer offtake. So I think kind of refocusing some of our efforts on building consumer. Also, a lot of stuff that we started to do was, we realized that the distribution gaps we had, Nigeria is really a case study of, we've remapped the entire route to market. We've put in an entire new distribution network, which includes sales vans. Okada is like a motorcycle sales van, etc., sales vehicles. So we started doing that, and the growth comes. So it's really interesting that we realized the pockets of areas that we were just not available. How can you get a consumer to buy your product when you're not even available in the store that they go to, or even the salon they go to, etc., etc.? So I know it sounds very simplistic, and it's a long haul. It's not something that can happen overnight. But it is pleasing, really, really, when you see that the transition and the areas of focus. For example, just in the city of Lagos alone, we had such distribution gaps. In the city where our head office is, the city where our team is, you shouldn't be having it. But part of the thing is we didn't go to the last mile. We were really probably just getting to distributor to a cash and carry kind of arrangement without driving distribution to the last mile. And that focus has been across the clusters. We've had different levels of success because it's also to do with what is the trade structure. Some things take longer. It's also about do we have the right people to drive the right route to market initiatives. And this is an area we have a lot of competence to be built. We have a lot of training that needs to happen because we don't have a well-oiled sales machine today. But the success we've seen is coming mainly from those efforts, and I think this is what's allowing us to get the growth. I can always say it's smarter marketing, but to be very clear, it is really doing the basics of distribution, numeric and weighted distribution, getting products, and also understanding pricing a bit more. Because we do two things. One, we leave too much money on the table. We don't price much enough, or we outprice ourselves because we have other efficiencies. So trying to figure that out, and also making sure that we watch the forex, because one of the challenges we have is if you don't take incremental continual pricing, you could find yourself on the wrong end of the stick because you've not you don't have a sustainable profitable growth. And I think this has been the other thing. So I think probably if you only allowed me to say one thing, I will tell you it's route to market. Yes, much more sharper consumer focus, understanding what are we spending on in the marketing mix, and making choices, because we were trying to do too many things all over the place, and we sometimes choosing the battles in a bit more. Even when it comes to the number of SKUs, we have so many products. Some of it doesn't have focus. Really becoming saying, okay, what is the optimizer that we need to have in the business, and making sure the ranging relevant by channel, sub channel, etc. I just think let's honestly, the agility to quickly transform into market has been one of the key successes that we've seen.
Very interesting, Dharnesh. Just two sub-questions as a follow-up on this one. Firstly, how far are we in this journey of getting a better route to market? Would you say across all the countries that you are present in, as a whole, as an aggregate, would you say you are like 30% into the journey, 70% is remaining, or is it vice versa? Some kind of flavor if you can give on that. And secondly is if you can also give some numerical quantification of this route to market in terms of, let's say, when you came in, what was the total number of outlets you were reaching directly versus wholesaler, and how that percentage has changed, and how it will change over the next 2-3 years as well. So that will be very useful, Dharnesh.
Okay. So the first thing, I have to apologize for the fact that, because it's so many markets, the playbook is very different. And we have to make choices in the beginning. And I think when you see some of the really good growth coming from some of the what we call focus markets is because we don't get South Africa right and Nigeria right and Kenya right and the US right. If you don't get that right and you start spreading yourself too thin across, so you never. And the question you ask is actually a super difficult question to answer, because the ability to access data across these very fragmented markets, even in a country like Nigeria, you can get a good sense of maybe Lagos and Abuja, but the minute you get beyond into the second tier cities, you have zero clue, because so you kind of have to do your own research. So I think one of the things is how do we create our own sales tools to get the kind of data, etc. So I'm really sorry that I will tell you, actually it's about cities, not even about countries. And the challenge is, so we have seen, and I think we moved maybe in percentage terms in Lagos alone by over 25% distribution gains in the last 6 months. And that is, and I can only talk about one city because, if you start extrapolating them and saying what is the next battle, and part of the reason is it takes time, it takes effort, and it takes the talent. And we've had to start building this, the talent to be able to scale this up. South Africa is a very different place. The trade is far more organized. In South Africa, we have to be more smarter about talking category management, And most of the retailers actually play across multiple channels. So even a ShopRite plays from a hypermarket all the way to a cash and carry store. So understanding that even amongst a single customer in South Africa, it's a multi-channel player. What is the category talking? What is the category discussion that allows you to become a partner of the retailer who will get you the distribution? Whereas Nigeria is very different, or Kenya is very different. So I think the challenge would and this same question you asked, I wish I could have the answer, because if I could find some way of putting all of this into one data set, and it is by channel, it's not even by geography, by channel. My own personal assessment, and please, this is coming from intuition and instinct and my own experience without because no one really knows. You can't say, Nielsen cannot give you a retail universe. They give you an idea, but Nielsen's pickup generally is like about 30%, right? So I would say only around 22% numeric distribution. And the idealist in me would say 100% is the target, but you also have to understand that there's just economies of scale. The cost to serve maybe a bit handicaps you later. So what is your distribution ambition? It depends on the geography, but for example, in South Africa, you can get 85-90% distribution because by way of the trade structure. In Nigeria, if you get to 40% numeric distribution, you are doing well. So I'm really sorry, but I will. We have to. The team and I have been trying to figure out how to quantify this. So one day
I understand.
And I hope to get the answer very soon. Yeah. And with regards when it is really about a scaling up, and I think the one discipline that we've had to put in, guys, we can't do everything. Just a very general statement, if I can make, Dharnesh, is that there is still a lot more to do in this route to market journey. It's not as if you have put in place most of the actions already on the ground. No. We are still at the starting gates, to be very honest. And what we've been doing is what I've also is we experimenting. We experimented with a van sales model in Nigeria. We first started in Lagos. It has been amazing. We were getting into neighborhoods, our distribution, so it's so encouraging. Now the question is, obviously you need capital to drive it further, right? But at the same time, it's a watch out because it's an operation. So you need to make sure you have the right governance, the right management, because it can also run away with you. So now the team has come back, and I just talk about the Nigerian team. We've come back with a scale-up plan. Adding 20 vans for this so many months. By the next quarter. So they've got a scale-up plan over the next 18 months. And then we say, okay, now let's pause and let's see what has been the cost to serve. Are we getting the return for their investment? So far, we believe it's a great model. One of the things I'm going to try now in Kenya is I've asked the Kenyan team to borrow some of the ideas of the Nigerian team. And let's take 10 down and do a pilot in one city. So there's a lot of experimentation going on because, I think part of if it was pure FMCG, to be very honest, it's easier, But also because we have this portfolio that tangents in one way with hair extension that is very different to the base FMCG. So you start having this multiple channel, but also the same time multiple category. So that's why we experimenting more. And in a way, I'm probably not designing a new unique thing, but tailoring a route to market by that's relevant to your category, and especially with the hair extension business, which we are beginning to have more and more success. And honestly, at the same time, bringing back discipline. And I think if you ask Samir why he's happier the most, obviously Samir loves the growth, but he's also happier that we have become much more tougher on our accounts receivable, much more disciplined in the way we're managing cash, because the problem with route to market also is you can start expanding like crazy and you don't get paid 2 months later, then you have a bigger problem. So I think calibrated is probably the right way, responsible is probably the right way for me to describe. So if I tell you a timeline, in our focus market, it's minimum an 18-month journey before we say, okay, now we are comfortable. And now let's scale up to the second tier, etc.
Got you. My second and last question, Ganesh, is on margins. When this business was acquired about 7, 8 years ago, we were told that the margins are high teens or close to about 20% at EBITDA level. But then they kept falling and for a brief while went into single digits as well. Now they are in low double digits. What is your vision for the margins of this business in the medium term, let's say on a 3-year kind of horizon, 2 to 3 year horizon? What kind of margins would you be targeting?
Look, I will. I'm very happy to even extend the discussion to get Samir to be part of it. But I let me start with this one premise. If we want to play in markets that are tough and we want to win in markets that we cannot talk about anything less than double-digit margins. I think, you have to build that pipeline. And I think getting to 15, 16, 17 has to be the goal. Otherwise, and it comes from two things. One is better pricing, better consumer offering, but it's also about fixing operational challenges. But if you talk about over a long period, we have to get to that kind of saliency, and then you can say you've really begun to succeed in these markets. And I think this has been definitely the direction, definitely something we are very serious about doing. And I think I think we're beginning to ourselves understand what is the pathway to that kind of stuff. So I don't know, Samir, if you just want to say a few things.
Yeah, thanks, Ganesh. No, I think, Percy, we have called this out in the past, right? I mean, that ambition is to sort of scale up on margins, but I think the pivots, would be more critical to be, kind of understood and discussed. And it starts with scale, right? Because the moment we get scale, we get growth. I think a natural fallout of that will be margins. The other pivot to margins also will be, kind of value upgrade or premiumization in our own way. And we do have the portfolio, and even within portfolio like hair extension, there is possibility of, sort of uptrading, right? I mean, consumers. And last but not the least, there's cost saving programs, something which we have seen, within larger GCPL, set up in India, Indonesia over the past now, I think 5 to 6 years is what is getting just cross-pollinated in, multiple countries in Africa, and this being just the first year. So we do expect there is huge amount of, kind of steam left over there. On creating a pool, right? Part of which gets reinvested back for growth, and part of which will also, sort of expand margin. So, yeah, from whatever 10-11%, kind of base margins where we are, at this point in time, the ambition is to take it to at least, kind of 17-18% over a period of next, kind of 4 to 5 years. Okay.
Very helpful.
Just to add, yeah. Thank you.
Thank you. The next question is from the line of Abneesh Roy from Edelweiss. Please go ahead.
Thanks, Ganesh, and congrats on very good recovery in the business, both on sales and margins. My first question is, you mentioned because of COVID, there are dimensions and challenges. So I wanted to understand what are the changes in consumer habits or the product category you're seeing because of the COVID, because of the lockdown, because of any wave 2, wave 3 happening. Similarly, on the margins, if you could comment. So both my questions are on the current state of the business. So the margins, we are seeing inflation across raw materials. So if you could discuss how the inflationary pressure is there in your business.
Thank you for that. I think the first point is that consumers are definitely have been changing a lot of the patterns, and it's a bit different. I think the e-commerce in some categories definitely have a higher salience, and one of the things is we started like a D2C campaign, and we've seen the benefits of that. The other area, which I know it sounds a bit strange, but in Africa there's an opportunity for premiumization, and this is another area where we think, what are the value up opportunities? So we think consumers are saying that we want something that's more value. We don't necessarily just want cheap on the one side, and the other side is obviously with people unemployment on the rise, inflationary pressures, etc. We have to be much more closer to the ground, and I think this really understanding where are the consumer pivots. But one of the plans we have going forward, especially in the big changes we have, and it's hard for me to make a broad brush comment because we play in so many different categories. But definitely, self help in terms of consumers doing more by themselves rather than going to a salon, as an example, become an important thing. And how can we provide solutions for the consumer in terms of, I can't go to a salon as much as I used to. How can you help me to create products that become easier for me to do at home? So do it yourself as a one broad consumer thrust we are seeing in our hair care, in our hair extension, hair fashion businesses definitely coming through. And I think this is something we have to watch. At the same time, pricing, and I'll just let Samir talk a bit more about the impact of inflation and margins.
Yeah, thanks, Ganesh. No, Abneesh, I think there has been, kind of marginal inflation, especially because of, crude, and also because of, increase in global logistics, costs, because there is a good amount of imports which, comes in most of the markets in Africa. Thankfully, there hasn't been any inflation challenge because of, sharp currency fluctuations. I think most of the markets have been extremely stable over last, sort of year or so. In fact, some markets like South Africa have seen, currency appreciation then, depreciation. But I think the point is to be smart on pricing, right? Because that's going to be very critical. I mean, how do you strike a fine balance between passing on the increase in input cost, right, through pricing, in parallel also driving, kind of strong, volumes growth. So that's going to be, the model. We also would be, placed at a marginal competitive advantage compared to a lot of our peers. That's because we have back-end manufacturing facility compared to a lot of our peers who are also, sort of importers, right? So the impact of inflation is relatively higher for them as compared to what it is, for us. So we also get opportunity actually in, kind of high inflation scenario to again, gain market share. But yeah, at this point in time, we are not overly worried in terms of, inflation impact, especially on, margins. My sense is scale as well as smart pricing, and last but not the least, again, costing programs should, kind of get our margins, sort of moving up.
Sure. Thanks. That was useful. My last question, Dharnesh. So you have been there in this business for 4 quarters. I'm sure you'll be prioritizing given the scale of the business. So is there any business or say any geography where you want to defocus or maybe even divest at some stage? Could you share anything you want to put in the public domain on this?
Yes. So I think your first one is about where focus, right? And honestly, I have this old philosophy which hopefully is right. If you want to really win in Africa, you have to win in the biggest market, and the biggest market is Nigeria. So if we really put the right things in place, the right focus areas. And I personally lived in Nigeria, and I personally run a business there, and I just know the possibilities are there tremendously. Obviously, you have to do it in the right way, and I think this is where people, you can get so excited about the opportunity, and you forget to put the right governance framework, and that's when things go wrong. And most people have failed. It's not because they failed because the consumer opportunity wasn't there. You failed because you didn't put the right guardrails or. So I think balancing those two is important, but definitely absolute focus Nigeria. US, I know I'm not talking about Africa, but US has so much opportunity, and we begin to see some really good changes happening now. I'm so excited. In the last couple of weeks, we finally got into Walmart with our hair extension business, with our first entry into the US market. And Walmart has given us exclusivity for a year in the category. Obviously, it comes with a lot of responsibility to get it right. But that, if we get it right, will be a totally game changer, because we actually a new category in a new geography, which is exciting. The value opportunity in the US as opposed to Africa is so much more advantageous. So there's an opportunity for that. It is highly competitive, so it doesn't mean it will be easy. So I think that's. South Africa will always remain one of those areas where we have under-realized our opportunity, and it may not be as sexy as a Nigeria, but at the same time, you have to play, and you have to scale your business to a certain level. And I think we still have a lot opportunity in South Africa. When it comes to defocus, it seems like you've been in my meeting for the last 2 days, and I think this is the big challenge, that understanding. And when I talked about a bit earlier in the opening address about business models, So we have to become smart, really more tougher on making choices. That is this a fully fledged business where we put all the bells and whistles, the entire team, and we focus, or is this business more an enterprise model kind of business, which is a dedicated distributor, we become a supplier and slowly maybe build up some consumer demand. But I think that clarity of choice has not been very clear. It has not been clear in the past because we have been trying to do too many things all over the place. And I think this clarity you will find coming, and I'm not really now to share the geographies because I've also had impacts on teams, etc. But definitely part of our restructuring or refocus will be making those choices. And one of those, part of that is also how much of back office are we leaving everywhere, which we could be synergizing and creating shared service centers as another way of becoming more efficient in some of these markets. But absolutely right. The choice of what not to focus on is as important as what to focus on, and this has been it's hard in a way because you kind of got teams there and you kind of got some historical sales, etc. But the choice of we can do it all, but with a different business model. And I think this is the what we are going through as a team now in remapping.
Sure, thanks. That's all from me. Very useful. Thank you.
Thank you.
Thank you. Participants, to ask a question, you may press star and 1. The next question is from the line of Richard Lu from JM Financial. Please go ahead.
Hi, Dharnesh. Thank you for taking my question. Dharnesh, I'm going a bit off tangent out here, but my question is that to us as outside observer, GCPL Africa is really a hair care business, right? And a hair care business trying to get into HI, and we look at it that way because hair care is what GCPL acquired when they entered into Africa. But with your experience and understanding of Africa more holistically, do you at some point look at at repositioning that business as a more total comprehensive FMCG business rather than one which are present in these niche areas only, or like you mentioned that that since there is no brand recognition for GCPL, Darling or whatever like Unilever or Nestle had, that would be too much of a long shot.
Yeah, so I actually see a few ways. I think, which is in a way, I'm answering this question by saying that's one of the reasons why we decided to put a very focused, centralized category teams, because the one focus will be how do we scale up a brand. So I think the other issue is that 60% of our business is hair extension, and the rest is what you would call FMCG will fall into. But the opportunity on that is there. But the question is who does what. In the past, the way we were structured is everybody was doing everything. And then you don't get the focus. So in the way we restructure the organization and restructure the team, total on-ground execution can be one team, but who's setting brand strategy, who's doing the communication work, who's bringing the consumer insight? It can't be everybody's doing everything. So I started with to be very honest, when I joined, I started with this philosophy: we have to become an and company. We have to do hair extension and FMCG. We have to grow top and bottom line, right? So later on, I realized, okay, hold on. It sounds cool, but this needs a different way and we need a different structure. And I think this is the journey we're on now, because the opportunity is there. And especially when you think about, what can we leverage? We have certain strength, category strength and knowledge. If you look at the knowledge we have in HI, in soaps, etc., even in hair color from India, how have we been leveraging the knowledge? Because we have amazing knowledge from technical to consumer insight. And how can we leverage this at the same time, tailor for local execution? And even if it means changing the product, but basically the product is the same, it has been the question. And I think one of the barriers we've had is the barrier has been focus. That I'm just to illustrate, I will tell you. Imagine the day in life of a brand manager who, for first half an hour, talks about hair extension, next half an hour talks about HI, next half an hour. You're never going to get that focus. I think one of the ways of us driving that was to create the right focus structure. And I know structure doesn't do everything, but I think it will give us some clarity. We hold the right people accountable for the right category play. At the same time, understand it in our route to market. We may have two very different, because it's about channels. And it could be a specialty channel for hair extension, whereas something else. And yet in some markets, if I just talk about Walmart as an example, because it's the same thing in South Africa, is if you find a retailer that is having all your categories, so at the customer management level, you can talk the same thing, but at the category level, and how do you sell your category differently? So we feel that one of the ways to make our life easier, and maybe we'll get it right, is let's refocus the team. Let's refocus what people to understand the key success factors. What is your KPI? And if your KPI is to be everything to everybody, it's never going to work. And I think so. This, I think, we already seen that it's going to work. I mean, maybe we're just too close to it and we feel that it's the right depth you have. But I think this will allow us to do what you're talking about, because we can definitely do both. I think this is the key. If we like, okay, guys, we're wasting our time. Let's just become a hair extension business. Then okay, that's a different discussion. But you will see it, because look, other people have done it. So what is the rocket science? The rocket science is making sure you put the right focus, because it's all about focus.
Okay, got it. Thank you. That's all I have. Thank you. Wish you all the best.
Thank you.
Thank you. The next question is from the line of Avi Mehta from Macquarie. Please go ahead.
Hi. Hi, can you hear me?
Yes, hi.
Yeah, hi. Sorry, I had a small question about... Sorry, someone was on hold. Can I go on?
Yes,
yeah. Yeah, so see, at the start of the call, you highlighted that the way to succeed in Africa is, on-ground execution. And, in the middle of the call, you were also clearly highlighting about the difference in geographies, not just at a country level, but even at a city level. And just trying to, align these two, data points with the organization structure where you're talking about category. Would it not entail that a geography-focused, organization structure would be more able to drive growth? Or I just want to understand, what am I missing? If you could please help that.
No. It is a great question, because it's the same question everybody has asked us, and we have asked ourselves. And I think the way for me to describe this is the freedom of a tight brief. In other words, execution has to be local, because that's what happens, right? But when we're talking about developing a new product or getting broad consumer insights, where is that coming from? And what we found is everybody was reinventing the wheel, if I may say so. Everybody was recreating products, and a lot of our products are actually can be deployed. A common from a consumer, let's say, from a certain type of crochet or a certain type of weave, it is not unique to the geography. The way you may tangent your local communication or your route to market may be local. So I think there's what is the broad consumer insights that you can leverage, right? And then if you dissect the two things of saying this is local execution, and you focus on that rather than everybody becoming a strategist. And I think still the point where everybody was doing analysis and becoming a strategist rather than doing. And I'm probably making it very simplistic, but I think so. The whole idea was, if we see a big trend, and we've done this in the past, we've seen big trends happening, but we didn't scale it. So it took like 6 months for Kenya to learn about a certain style of hair that was already being successful in Nigeria. Why did it? And yet our competitor in Kenya started doing the same thing. So we left an opportunity because we didn't learn from ourselves. So I think this cross learning, and if we only know what we know, right? And I think so. So when I talk about centralized category structures, it's important that it doesn't mean that the local teams don't have the P&L responsibility. The local team doesn't have the execution, or by the way, even the opportunity to challenge, say, look, this product in the way you are giving it to me doesn't work for my market. But what I want is that the broad category principles, the playbooks can be very open, the local execution of the playbook. Because oftentimes we are reinventing a playbook. Can you imagine we talk to an agency about a communication plan, and if I have to do the same thing by market, it just doesn't become effective or efficient in any way. So getting and look, the key of this is is the ways of working. And I think this is the one thing that the message to the team is structure is one thing, but the ways you work. So it doesn't mean that the role of the central category team is direction, leadership, sharing ideas, etc. It is not doing the job that the local team is supposed to do. So it's somewhere in between. And look, I've experienced this thing working, right? And I do think if we weigh out what it can give us, as long as it doesn't become prescriptive, I think this is the key. It's not prescriptive that, whatever somebody puts in one place, whatever they tell me to do, I will have to do. No. Because I have to allow the local CEOs, the local teams to have the opportunity to say, we like what you're giving us, however we feel it should be this. So there is that element of local, so when I say execution, I mean that part of but not some total concepts development, total innovation development, because that's what we found a lot of. Everybody was creating, and when you do a kind of audit, you realize a lot of people in different markets were creating the same thing. The end game or the consumer solution was the same, but we wasted a lot of time rather than learn from each other. So we were not connecting our own dots in a way.
But if I may, the way then forward would be typically when you have a central category team, you tend to kind of start applying Pareto's principle, and then you kind of have a situation where you focus on the key markets because that's where the growth would come in, that's where the scale would come in for the category. So would that be the playbook that you would start to kind of look at, that the larger markets become more the focus area rather than smaller markets? And you'd probably look to extend it smaller.
Yeah, look, exactly right. Because I think this question about if we're just playing an enterprise model I use the word second tier or third tier market, where it's mainly distributor-led, opportunistic play, I wouldn't want the category team focusing on that, because we have to win with the consumer first and we have to build scale. In an ideal world, if we get Nigeria to be double its size, South Africa to be with 30-40% more than where it is today, when we start getting there, okay, now we are at a traction where we can now focus elsewhere. So I think in the next 18 months for sure, it's really 3-4 big markets total focus. It doesn't mean the other stuff won't happen, but I don't want to start using money to invest in consumers. And I use the example. Why would I invest in Zambia and Uganda for small returns when I rather keep the focus and even the marketing investment where the multiple opportunity is even greater in Nigeria. So I think this is kind of what we mean.
Okay. And so lastly, if I may, Samir, when you say scale, then does this kind of flow into scale being more geography driven rather than on an overall basis? Is that is the right way to look at it, Samir?
Yeah, I think it will go hand in hand, Avi, right? The large markets, should get a scale, and they are relatively large one, right, in the overall portfolio.
Yeah.
For example, Nigeria today itself would be, close to 25%, and West Cluster, which is Nigeria and Ghana, would be like more than a third, right? So I think the task is to sort of, maintain, this tier 2, tier 3, kind of countries at steady state growth rates, right? And purely from prioritization, over-invest, across resources in some of the large markets like Nigeria, South Africa, which should see, strong growth rates, right? So that's the, kind of playbook, at least at this point in time, which we are, sort of executing upon.
Perfect. Thanks. That's all from my side. Thank you very much.
Thank you.
Thank you.
Thank you. The next question is from the line of Mihir Shah from Nomura. Please go ahead.
Hi. Thank you, Danesh. If you can just throw some light on what is the kind of distribution overlap between categories like hair extensions and HI, and maybe also wet hair. So that's one.
Okay. So it depends on geography, but you would often find that whether it's a large distributor or a large modernized trade, I'll use the word modernized trade, you would see overlaps. But if you go lower down and the salience of, for example, hair extension in salon would be higher, or what they call beauty stores, so the specialty channels have a different play. The question is, where's the specialty channel buying his product from? It could be a big wholesaler. But the wholesaler could keep a multiple portfolio because he has different sets of customers. So the different sets of customers could be a salon as well as a mom and pop store. So I think where is the, if we take retailer 1, retailer 2, retailer 3, means retailer 3 is the one who gets to the actual consumer, mapping that out, and understanding that there are synergies. But oftentimes, the mistake we make is thinking that, that if we don't, is that we should do all that. For example, in Kenya, it's very different. In Kenya, it's really beauty store and salon is much higher in salience rather than a cash and carry kind of place. What we are finding as well is more and more modern retailers, and I use the word modern retailers in terms of mid-size or mini mart or a supermarket. More and more, and I think COVID has probably done this more. They're looking for opportunities. We're getting a lot more discussions happening where we've been asked to supply hair extension into this. And if you just think about why did Walmart have never sold hair extension? Why have we managed to get this? I think even at a Walmart level, we're realizing that consumers, the shopper, wants to kind of have an option of buying as much as they can in a one-stop rather than scooting around. And maybe it's one of the dynamics of COVID. But we're seeing the same pivot begin to play. And South Africa is a good example where, retailers that never ever thought hair extension was an important category for them are now really beginning to talk to us. Some of them are scaling with us already. So we're seeing that play. But what we do have to have is that even at I know I'm now sounding right to the last level, but even a key account manager or the sales guy, the focus has to be different because the buyers are generally different. The category play is different. So I think in ideal world, I would like to have one person doing everything, but I think this would be one of the mistakes. So we could try to try to be efficient and have one sales organization doing everything. The problem is that efficiency is one thing, but effectiveness is another. And in some of the places, we'll be keeping a dual track strategy, which is at the last mile. The focus is the sales activation team is focusing mainly on hair extension, and a lot of time hair extension and hair regimen products, wet hair products go together. And in the others, the FMCG. And I think Kenya is a good example where it's very different today. We do see opportunities to synergize more, but this is more retailer-led rather than us leading this change. And I think one of the things that I see happening in the future, the consolidation, firstly, of retailers, but also consolidation of offerings, where shoppers will start making less choices. Why do I need to go to 5 different outlets for 5 different categories in some of these markets? And we've seen that happening. So I think this question about in an ideal world, I would love to have a single sales force with all our products. And when I mean sales force, I mean the on-ground execution sales team. But today, we are preferring to keep the effectiveness and possibly find synergies and efficiencies later in the cost to serve.
Understood. Thank you. No, I was trying to just understand, the potential of any new category launches that you can do, especially like in hygiene, and have more carrier packs. If you have higher distribution overlap, and it can strengthen, especially when you're strengthening your go-to-market strategy currently, right? My second question, actually, if you can throw some light on.
If I may.
Yeah.
If I may, it's absolutely the right point. I think for example, we just launched Mr. Magic in South Africa, which is a powder to liquid hand wash. And it's exactly that suddenly we have a basket. So we've been dealing with those channels and these customers. We are now going to them, leveraging our relationship to have new offerings. And it's a totally new offering. It's a category we did not play in South Africa. We launched now 3.5 weeks ago. So that is a signal of kind of the opportunities I think you are talking about.
Exactly. Fantastic. That's very pleasing to hear. Thank you for that. Second question, Dhanesh, was actually on the wet hair category. If you can throw some light on sawn or wet hair, we understand the high relevance in the US market. How do we think about it in the Africa market, the success that we've had here and the potential that we see here? Some insight would be very helpful. Thank you.
Yeah. So there's two very different things. One is what we've often done in the past is we've taken products from the US and put it into Africa. We have one of the things we've done recently is begin to localize production, for example, of African fried, etc., in Nigeria, because the efficiencies are there. We can produce at a lower cost. So I think that's the one part. The other part is really from a consumer perspective. Again, it's about focus, but this category, the move to naturals, etc., has been quite a big tangent. We didn't scale up fast enough, and we've seen this. So now we begin to see some success. And I think with wet, especially during the COVID environment, the consumer behavior was a bit different. We have the right product offerings to take advantage of that or not? So we have different success stories. We've seen good salience coming through in East Africa, Kenya, Tanzania, Nigeria, very good traction. South Africa, not so much. And very interestingly, we were a bit slow on e-commerce in South Africa. So the sales of e-commerce became, much more, and this is because of all the multiple lockdowns that was experienced in South Africa. And we were not ready for this, so ramping that up. One of the things, for example, in Nigeria, we started a D2C, direct-to-consumer model. Very great traction, which we started, and now it's so we started with hair extension, and now we are expanding it into hair regimen, which is wet hair, etc. So very different. I think this question in a way is very very similar to this question about why have a category structure. What was happening is we had a lot of different tangents, different look and feel, different product offerings in the various geographies. We were not synergizing. We didn't come across from who is the consumer we want to win with, what is the price point, what is the offering, what is the value offering, etc. And then say, how do we then execute locally with a local, creative execution, etc. And this is an area that was missing. So we were very much opportunistic in this across different geographies. And I think this refocus is I believe it will help us also understanding more. And one of the things that gives us more visibility to watch for the future, because we often see a lot of stuff that's happened, especially in the US. We were a bit slow to scale it across some of the key African markets. So now where we're really getting a sense check, where we're getting the insights quicker, we are scanning the market, seeing which are the competitors, what are people launching, what is the latest trend in the US that we could quickly take into Africa, etc. You did ask a question about the US wet business, right?
Yeah, no, I was just wanting to understand more from the Africa point of view. I think that's all.
Okay.
If I can just one more, maybe small one. What is the percentage of sales in e-commerce from e-commerce right now for our Africa business?
So basically, it's only Nigeria that we really scale, and it's like really nothing. So I don't even want to talk about it. But when you look at the month-on-month growth, it's really coming through, and we only did Nigeria, we only did Lagos in B2C to see if the model works. South Africa, we're now listing in places like Take a Lot, etc. And we've also started this concept called Diva stores, which is like Darling stores, Darling branded online stores. So it's called Diva stores. So we're playing with this now in Kenya, Nigeria, and South Africa, because also the back end of e-commerce always being the challenge. We need a different type of distributor. We need to create logistics partners. But from 0 to 0.1 has been very quick. So it means the opportunity is there. And part of our play for this year is getting it right. Because to be honest, we struggled a lot on the logistics side. So we knew we could get the consumer, but getting it to the consumer at the right price, the logistics cost, finding the right partner, finding the right way to manage the back office of this has been some of the learnings, and I think we've learned a lot. But what we've been doing is adopting some play models in terms of let's play with this and see if it works. And then work the model out. But it's honestly like not even 0.2% or something. So, but when we started it, the traction is good and the repeat purchase is good. So it tells us that we're onto something. We just have to we have to play with the model till we get it right. And it's also about consumer acceptance or finding. I've for the last 20 years I bought my hair at the salon, and suddenly I'm gonna buy it online. what is that? And this is where the value of the brand comes in, and I think this is what's helping us a lot. We have good credibility on the Darling brand, and it's easier to facilitate online shopping with a brand. And we've seen, if I go to the US business, it's not our business, but the category in the US, it's only about 3% online for hair extension. And part of the issue is it's a lot about I want to see styles, I want to see colors, I want to see length. It's a very high touch kind of category when I'm buying it. But once I'm into it and I know exactly my repeat budget, we've seen that kind of salience coming through. In the US, for example, one of our things is that Walmart.com, we will put all our Darling products will be on Walmart.com, and this I think will give us a lot of learnings for in hair extension, which is probably at a scale that we've not done in the past.
Right. No, this is very insightful. Thank you so much for this, Ganesh. That's all from me.
Thank you very much.
Thank you. As this was the last question today, we conclude here. On behalf of Axis Capital Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
Thank you, everybody, for your time. We appreciate it.